So we didn't want to, like in this area, alternatives are pretty broad, right?
Yeah.
But, Patrick, give them a couple alternatives maybe in the real estate space. Or
Yeah,
something
and
like that.
first I want to emphasize,
It's not for everybody, but
but more so that there is real estate in the stock market. Vanguard has a mutual fund
Sure.
of real estate. This is not what we're talking about with alternatives and diversification. People on the talking heads are going to say how they like it because they like the underlying asset in there. The problem is because of the liquidity, because of the tradability of it, all ships sink during a recession time period. So when we talk about real estate, we're talking about things that are not correlated to the market. And the ones we really like for on the real estate side are self-storage, which has been proven year over year that is recession resilient, and during high inflation rates they're able to raise rents, those type of things, easy to change over.
Still a fragmented market even after a lot of consolidation,
right? And people downsize, if they lose their unemployment, they don't want to sell all their stuff, so they put it in storage. During up times, people buy too much crap on Amazon and they don't, they put the old stuff in storage. So it's a very recession resilient, growth resilient type of play. And one other one that I just want to mention that we didn't really talk about was data centers, cell phone towers. These are things that everybody is going to still have a cell phone. If you lose your job, you're still going to have your cell phone. You're still going to be watching YouTube. You're still going to be watching Amazon, Facebook. These are very recession resilient type of asset classes that will only benefit you during a time of rising rates and inflation. Yeah,
and I would say just follow what rich people do, right? If you want to, go where the money goes. And in these, when you watch what wealthy people do in these situations, they go up the food chain. They look for security in their assets, right? Because if they can get security now, they can always turn that into speculation later. So if you're going to do something, then, and this would be in the alternative space, you become a lender, right? You secure that lending with some kind of asset. And if you're going to go into the real estate world in a bear market, then you got to break down real estate and say what sectors or what areas of real estate still have opportunity even if the overall economy slumps. So you can analyze the real estate alternatives just like you can sectors in the stock market. And then outside of that, you have things like we talked about with Jordan Kimmel, where you have long short funds and hedge funds. That may not necessarily be your big income producers, but they can be kind of hedges to portfolios. So that's another feature of alternatives, and a lot of those will have more liquidity. And a big thing for people. This is also why alternatives work well in a portfolio and in reducing volatility is because think about this: if you go into an investment of storage units or something like that, well, the value is not tracked day by day like a stock is, right? The value is valued, quarterly and annually, and so your price changes are pretty much irrelevant until the moment you sell. Right, so everything that happens in between doesn't freak you out because you're not seeing it on your Robinhood app and crap like that.
Well, and you talk, the lending aspect of it. You talked about how it's interesting how banks make money.
Sure.
Well, you can do that yourself. So it's like being your own bank is another great way of taking advantage of rising interest rates to benefit yourself and not have that volatility because you now own whatever underlying assets. I'm not just saying give money willy-nilly. It's you got to have an asset backing it, whatever equipment, whatever it may be.
Yeah. So there's a lot of alternatives out there, and not all of them are real estate. But there's at the end of the day, in this kind of environment, if you are going to take risks, then secure the risk and not be in the masses.